Good morning, everybody. Today is Monday, July 27th, and this is your QOL pre-market analysis. What you see right now is our webpage here at QOLtrading.com. If you come to the page here, you put your name and your email address in here, you will be subscribed for our free weekly newsletter that we put out every Sunday. And we put out our 19th edition yesterday. What you'll get is a brief market and review of what happened in the last week, and then with all price levels from your broader markets to your EFTs, the VIX. Right now, currently oil is a topic these days, so I have that on here. Your Mag 7 levels, any geopolitical news I can grab out there. I try to inform everybody. And then at the end here, I'll try to give you some price levels here of my own charting. Of course, you have to do your own homework on things. This is for educational purposes and for people that have more confluence. But you can see it's pretty informative here. And then I go over the economic calendar for the week ahead. And so then getting back to things, though, if you want to join our Discord community, you can either hit the live trading desk or you can hit this Discord symbol here, and it will bring you to the sign-in page. And in the sign-in page, you can join for free down here. You can upgrade to our live trading desk. So we do live trading from 9:30 in the morning to 11 a.m. Eastern time. And then you can also get access to subscribe to our QOL ORB Scalper indicator. And it's just to give you more confluence when you're trading. It's giving you areas where you could potentially take a buy or a sell. But you have to do your own homework on that. And then also there's a bundled package if you want a combination of both the live trading desk access and the indicator at the same time. Regarding the indicator here, we can go over quickly from Friday. We're looking at a 5-minute chart here, and you can see the range here is plotted here automatically here for on the high side here. You're with your green line and your red line for your low side of the range. And then down here you have your table. It spells it out for you, so you can see the range on Friday. The high was 322.68 and the low was 317.51 on the 5-minute opening range. It gives you your mid range, and then it gives you a signal here where you could potentially take a trade here. So at about 9:30, it gave you a signal here of a break here of the 317.51. Roughly about 9:35, it hit your first price target down here at around 312.34, and then probably another 10 minutes or so later, hit your second price target at 309.76 if you wanted to stay in this trade all day. It really didn't give you an exit sign until about a little before 1 o'clock in the afternoon. And then by the time it gave you an exit sign, your exit was about 309.76. So pretty good, pretty informative. Come on and take a look at it. And again, if you want to get access to all this stuff, just get to our website here. And it's pretty informative. If you have any questions, feel free to send me an email at jeff@qoltrading.com. Let's get into things right now. Again, if you're new to the channel here, subscribe to the channel, hit that thumbs up button, like this video. Don't be afraid to leave a comment down below if you want me to cover something I'm not covering. However, as I've said before, I do not cover any penny stocks, but I'll be glad to go over things that I don't cover. Today, we don't have anything on the docket for today. Some durable good orders that are coming in at 7:30. The big day is going to be Wednesday. Tomorrow, you have... what do we have for wholesale inventories here? You got consumer confidence. That may be a number that we'll pay attention to. And then Wednesday, here's your big day. You've got Kevin Warsh speaking at 1 o'clock and an announcement on the Fed fund rate. Okay, so but as far as the press conferences are concerned, I don't think they're going to be as volatile as they have been in the past, unless he starts leaking some of his body language. After Wednesday, on the economic side, we have advanced GDP price index quarter over quarter, and unemployment claims again on Wednesday as well. So that unemployment claims number moved the market last week a little bit here. So personal income also month over month, and then personal spending month over month. That's Thursday. Friday, I think we're kind of dead on the Friday. You got Chicago PMI, and then you've got revised University of Michigan consumer sentiment. But as I said before, I don't put too much weight on this University of Michigan sentiment. I think it's kind of politically driven on that front here. So let's get into things right now. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. We're looking at the VIX right now, 15-minute chart right now. It came down a little bit. Obviously, there's been a lot of back and forth what's happening over in Iran, in Iran as far as bombing and then not bombing and then ceasefire, and you never know which way to go. It's big tug of war right now. Big gap down right now. I'm not even going to plot it yet. It could possibly get filled today. We're still above the 50-day moving average at $17.28 and the 20-day moving average at $16.83. Ideally, we'd like this VIX to pierce these levels and then stay down below these levels so the market can get back trading in a normal situation. Getting over to oils right now. Obviously, oil is down. Big gap down we have here. Not even going to plot that yet. We'll see what happens tomorrow. So we'll see if we can lose this 50-day moving average at $83.84 a barrel. That would be nice, and maybe pull back down here to this 20-day moving average of $77.77 dollars per barrel. So we're kind of in between here. We're right at the mid-range here. Here's your 50-day moving average, and then you have your 100-day moving average sitting at $90 and a penny. So we do like that. We'd like to keep continuing losing these moving averages on the oil side, that is, right? So we still have this gap up here at $71.63 from July 10th. Hopefully that'll potentially get filled pretty soon. So let's get into our broader markets here. Looking at the ES right now, the ES gapping up. I plotted this gap up here. 74.4725 is a gap up level, so we'll have that on the charts until that gets filled. As you can see, we still have some gap downs here at 76.2479 from July 10th as well. Some hurdles to get over here. You have the 50-day and the 20-day right on top of each other, sitting at 75.3291. In order to feel confident on the longs here, you're going to have to probably get a good pop through that and hold, right? Right now, this could be a pop and fade level. It's a 75.2950 level. It's a low from July 7th. So what we talk about is break and retest, right? This could be a nice break and retest, pop into that level, and then maybe sell off again and maybe come back down here and close that 74.4725 gap that's created from today. So I would say right now, a couple levels that you can hold here. Nothing's changed on my charts, people. So just take a snapshot, put it on your charts, and then we'll adjust as the market moves through these levels here. So just for day, this is all day trading information, not swing trades. So if you're scalping, these are ideal charts, levels to have on your charts here. So let's get over to the SPY. The SPY right now, same thing on the SPY. We got a little gap up, little wiki on the SPY below the 20-day moving average. 746.27. I'm going to say the same thing. You need to get a break above 747.29 and hold, but then possibly you get a little resistance up here at the 750.20 level. It's a 715 low, right? So break and retest, right? So look at this high here. This is a low and a high. So we already broke and retest at one time, and probably good chance to do it again. Gap up here, 739.29 from today. So you got to watch that level and that close right there. If we lose these levels, we could come down here to 736.53. If we lose that, 731.75 is your next line of defense. Let's get over to the Nasdaq here. I'm going to try to move us along here quicker. I'm adding more and more data every morning here, so I'm going to try to move along pretty quickly. So the same thing, people. Just I'll have these charts up here long enough where you can take a snapshot and put them on your levels, put them on your own charts, and then we adjust as the market moves. Same thing, gap up here, 28,329.50 from Friday. So may fill today, this week, who knows. Upside here, got to get above, I would say 29,044 in order to push higher here. But you can see we have some headwind up here. Got a low from June 26th at 29,181.50, and then above that 29,319.27, which is a low from July 2nd. Downside here, you can see right now we are above the 100-day moving average, quite a bit lower at 27,989.89. But you also can see here, as I was saying on Friday, when you're below your moving averages, your thesis should be pop and fades, right? So we're below the 29,434.54, and the 50 is well above that at 29,785.56. So until you regain those moving averages, it's bearish, right? So you're looking for pop and fades. Let's get over to the Qs, then we'll start getting over to the MAX 7, and we'll keep moving forward here. Qs kind of wiki a little bit. I don't trade the Qs, but I like to put the levels up here for you. You have don't have any open point of controls open here, right? You can see this is why it's not a point of control that's open, because you had a point of control here, came back up here in post market and closed that point of control at 707.08. So I would say on the you have a fill point control. I'd like to leave these levels up here for a little bit and see how they react. So I would say if you pop up here, you may get some headwind. 723, right? So a little area up there. You may get some headwind up there, maybe a little pop and fade here, break and retest. Perfect example right there. Same thing as on the Nasdaq. We're below the 20-day moving average sitting at 711.71, and you have the 50 sitting at 718.29. Not confident on long-term bulls until you get above those moving averages. However, we are still holding the 100-day moving average at 671.65. If the market flushes, I would anticipate you get a lot of response there, as well as that 668.90 level. It's an April high from this year. Okay, that covers all that. Let's get into the Mag 7. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like that video for me. Don't be afraid to share these videos as well. NVIDIA, I think, we have some earnings going on this week. Let me get into that right now. I forgot to cover the earnings here. So Wednesday, we have Microsoft and Meta. So that's going to be a big day on Wednesday. Thursday, we have Amazon and Apple reporting. Apple has been a beast in the market right now. Reddit may move something a little bit here. You do have Robinhood also, Qualcomm on Wednesday. I don't see anything up until Wednesday that's going to really impact the market. I think all eyes are going to be on the Microsoft, Metas, and your Apples and Amazon, and they're going to wait till the earnings calls to talk about their capital expenditures towards AI. That seems to be the biggest topic right now, and that's why some of these stocks are in the penalty box because of the amount of money that they plan to spend for all of these stocks here. So probably going to be in NVIDIA. I'm not sure when they're coming out. They may come out maybe next week. I'm not sure, but pretty wicky right now. I would watch these levels. Again, nothing's changed on the charts here. Keep these levels up here. On the long side here, got to get above this 208.76 in order to have to feel long today. You can see we are above the 20-day moving average at 203.33 and above the 100-day moving average at 109.72. So there's definitely there's some wickiness here, right? So you saw what happened on Friday, first part of the morning straight uphill, and then we flushed out and we lost our market there. So I would say you do have some gap up here right now from the close. Maybe you come down here and you hit this close 206.84, and then you pop off it. But if you lose this close, I think we could possibly flush down 204.13 and then maybe come down here to this 203.33 level, 20-day moving average. But I do like this pullback down here to this regressional trend line that I have here from May of this year, and it's also sitting right above the 100-day moving average at 199.72. So I like that level right there. On the upside, if you do get above 213.99, 219.09 is in the makings there on the upside there for NVIDIA. Apple, the beast of the beasts right now. I mean, look at this. Absolutely beautiful right now in Apple. So it is respecting this 334.98 level, though, in pre-market. It's the extension that we had here at 127%. And that was from the all-time highs from, I drew that level from March 30th. So got to hold that level. I think if you lose the close, you could probably come down here, test this 329 level. But you got to be careful here, right? We talk about speed zones all the time, right? So you had a nice little speed zone here, recapped itself. So be careful that it doesn't lose its emphasis right now. However, it's earnings week right now, so you're probably not going to get much response until after the earnings call. So could rally into earnings, and then maybe you get a little sell-off after that. But you got to watch your price action and trade your levels. Meta's still below the 20-day moving average at 620.97, and the 200-day moving average at 638.07. So you got to watch that until while we're actually below the 100-day as well, so 615.31. So like I said earlier, while you're below your moving averages, your thesis should be pop and fades, looking for those levels to maybe get above it, and then you hold those levels, and then you can start pushing higher. But right now, while you're below the 100, the 20, and the 200 sitting at 638.07, I would be looking for pop and fades. I don't trade Meta, but I'm just giving you levels. It is holding this for a 592.66 level. It's a April of 2025 high. Good level right there. If you lose that, 572.24 is your level here. It's a June 23rd high from this year. And then we have this lower end regressional trend line that I have here from October 29th of 2025, sitting at 562.92. Okay, that's it for Meta. Let's get over to Google. Google, kind of in the penalty box, right? We watched these speed zones here that was created after the earnings call from last week, but I think it's going to going to be in a little bit of a consolidation pattern right now. If you do lose this 319.39 level, 310.75 is a fair value gap that I have from March of this year. And if you lose that 310.75, I don't have anything until 287.57 on the downside. On the upside, maybe you push into this 330.47. It's a high from November of last year. You probably get some headwind up there. And then I think an ideal short would be a pop into this 333.69. Same thing as I was telling you before, we're below the moving averages. So the 100-day moving average is sitting at 343.75. You have the 20-day moving average at 350.35, and then you have the 50 sitting way up there at 362.45. So thesis, we're looking for pop and fades. Maybe you pop through this low here, 333.69 at some point. 337.35 is a lower end regressional, midline regressional trend line that I have from May of this year. So put these, again, same thing, people, put these levels on your charts. They're not changing right now until we pop through them. I don't have anything below 287.57 yet. I think if we lose that level, I'll have to start digging deep on Google though. But I think Google maybe, consolidate for a little bit, and then maybe you can push back up here, and then you can retrace this speed zone that was created after the earnings call. Okay, moving forward in Amazon. Amazon, same thing, earnings this week. It's going to be Wiki. I wouldn't be trading it. I would watch it. We're below the same thing. Below the 100-day, it's sitting at 241.40, and the 20-day sitting at 243.84. And you have the 50-day moving average sitting at 249.22, called 250. Downside here, if we lose 326.10, you saw we held it on Thursday. If we lose 326.10, I've got a 226.10. I've got a 220.47 level. If we lose that, 214.98 is April 7th high. And if we lose April 7th high, I've got a March 30th high of 203.80. This would probably be an ideal pullback long, because that was the beginning of this tenacious rally we've been having since end of March. Okay, Microsoft. Same thing on Microsoft. Lots of speed zones on Microsoft here, right? You see what we talk about with the speed zones. Here was a speed zone on Thursday, fell down, didn't quite recoup it yet. So my thesis on trading Microsoft, I don't trade Microsoft. If you get a pop and hold above this 388.95, I think you can push into this 393.76 level and retrace all that. And if you get above this 393.76, huge speed zone right here, right into the 50-day moving average at 399.18. Call it 400 before you would get some headwind up there. That 400 would be a psychological number. So you got to watch these levels and see what they're going to do today. It seems like it's trying to curl right now. So 388.95 would be my line in the sand if I was trading it. Pop and hold above that, I'd be looking into the 393.76. Okay, moving forward, lastly, SpaceX, which is a dog. I told you it's not tradable for me at this point right now. Probably after lockup, and maybe if they issue more shares, there's not enough float to trade this for the equity side and as well as the option side, but I'm still putting it on here as well. 109.39 is the only level that I have down here. It's uncharted. We did get down at 110.23 in post-market on Friday. This is a 127% Fibonacci extension on the downside. So I would say, we are, you do have some speed zones here as well, but there's just really not enough data in here right now. And it's all news driven based on whatever Musk says, and that can turn the market real quick. I would say your line in the sand, if you can get above this 118.34, you could push into this open point of control at 123.61 before you got some headwind resistance here, right? You could also possibly put this level here. This is a low from July 21st, right? So I'll mark that for everybody here right now. So July 21st low. Okay, now let's get into Tesla, what we're going to do for today. Okay, Tesla. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. 30% flush last week. Tremendous speed zone that's here right now. It doesn't mean do we click the buy button today? No. Wait and see what the market shows us. We have a lot of headwind up here before this gets recap. But something I want to show everybody as far as speed zones and what they mean. We're looking at, I'm going to get a monthly chart up here right now. Here is a 5-year monthly chart for Tesla. Boom. Here's your 5-year. Look at all these speed zones that were created through the years, right? Let's see if we can make this a little bigger for us. So boom, here's a speed zone right here. This is from October of 2021. Market popped all the way back. Boom, this created a speed zone as one way, and then it filled that speed zone maybe a couple months later. Yeah, about 2-3 months later, it filled that speed zone, but created another speed zone on the way up, right? All these speed zones. When you get heavy one direction, there's a speed zone. Here's another speed zone down here. Boom, recouped itself. This became another speed zone. Boom, recouped itself right there. Now we are below some levels here that are concerning on the downside here, and I have those charted on my regular charts. But it's just something I wanted to show you here right now. So does this get, as long as Tesla stays a viable company, which I think they are going to be, then this gets repeated. It becomes a speed zone here. So you get a nice little speed zone that could be created here from this 339 level up to this 432 level. So $100 level here. We are looking at a monthly chart, so it doesn't mean it gets there in one day. The longer you go out on your charts, the longer it takes to fulfill that trade, right? So here's our trading chart, right? This is for trading during the day, not for swing trading. These are the levels that I have. We have a little tiny gap up here that could potentially fill from Friday. And let me get our point of controls here. It did create a point of control here down here, 309.64. On the downside here, if we lose this 309.64, this is the point of control that's open. Why is it an open point of control? Here is what was traded heavily at the end of the day on Friday. It created this point of control. This is automatically plotted on my charts here. It's from a script that I have. And I keep it open because if once a point of control is set, the market gravitates back to this point of control. It doesn't necessarily do it right away. We could talk about that point of control that we had up there at that 333. Where are you? 333.97. Look, this was on our chart since September of last year, and it finally got filled on July 23rd. 10 months later, it got filled. Same thing that we had on the charts last year. I had a $417 point of control level, and it didn't get filled. It filled 9 months later. It was open from January, and it filled in September. So we leave these levels on the charts, and then we trade off of these levels once they're created, right? So this really heavy green line that I have here, this is a long-term regressional trend line here that I have from January of 2023. So if the market does pop up here, you've got a 325.60 number. It's a weekly low from September. We were trading off of this level last week, and it seemed to be respecting it. So I would anticipate if you do get a pop and hold above this 318.82 level, this is a regressional trend line here from April of 2024 as well. So this is not a regressional. This is a Fibonacci level, 50%. Those are big levels, and that goes all the way back a couple years. So if you can get a break and pop a hold and hold above this 318.82, 325.60 is my next line that you push into. It also kind of retraces a little bit of a speed zone here, but this is your major speed zone right here. So in order to get comfortable getting long on Tesla again, you're going to have to see some consistent pops and holds, right? Not a pop and major sell, right? You lost 30 some odd percent on Tesla over last week, right? So that's a big move. So do we get a pop at some point? Yes. Does it come today? Who knows? I can't give you that answer. All I can give you are levels that I put on my charts and the levels that I trade off of while the market is moving. We are, very extended down here on the downside here on my, this is another script that I have here. It's a relative strength index that I have here, but with just different data pinpoints and points of trades in there. So right now 315.74, you could base your trade off of that, but ideally for me, I'd like to be above this 318.82, and then you could push it at 325.60 before you get some resistance, and then into this regressional trend line here at 329.47, and then maybe come back into this 333.97 level that was filled. I mean, you can see how it responded to this level right out of the bat here, right? It came down here, popped off it, and then it became resistance, right? So this could be a break and retest to that level, pop up into here, and then maybe you get some more downside on Tesla before you come back up here and you retrace these levels here. As far as what we're going to do for today, trading here, so I have today's expiration date of 320. I may start off with that, and then I have a 300 put price. Change that put price. Probably change that put price to 310 right out of the box right now. See where we close there. So that's a $3.20 premium on that side. So what does that mean if you're new to trading? If you're trading a premium, it's at $3.20. For every one lot you trade, it costs you $320 for your premium cost. It doesn't mean that you're going to lose $320 unless you let the option price expire. I have never, in all the years I've been trading, let an option price expire worthless, right? Because we are scalping. And this is why we do options, is because you create more leverage. You're able to use more. You're able to use more of your capital to get in the trade and get the same movement. And I typically, what I like to do is I like to trade a delta of about anywhere 35 to 40 cents, which means that for every dollar that the market moves, this premium price will move 35 to 40 cents, right? So if the market's moving up, I have my call box trader up here. I have my put price down here. So if the market's going up, I'm buying a call. If I think the market's going down, I'm buying a put. Now, obviously, I have more advanced trades, but I just, for the purpose of this channel, I try to teach the most basic way to trade options. There are plenty of different advanced ways of which I trade, but that comes on the mentorship side of the thing. So, but on the you want to get into our Discord channel for free, come and go to the website, and you can get access there. And then also, if you want to upgrade to everything else that we have as far as the trade room at 9:30 a.m. to 11 a.m. Eastern time, and then as well as our QOL ORB Scalper. So if you have any questions, again, you can shoot me an email at jeff@QOLtrading.com. If I don't see you in the trade room, I will see everybody tomorrow. Have a great day. Remember, you have all those earnings coming out on all those Mag 7s this week, Wednesday and Thursday.